Hi, and welcome to the Stock Scores Market Minutes for December 31st, 2018. So this week, last market minutes of the year, I want to talk about doing a skill assessment. The end of the year is a good time to assess your trading skills and make a plan for improvement. You want to analyze your trades, go through them all, look for common problems and common strengths. Write down those strengths and weaknesses. Then make a plan for how you can use your strengths, leverage your strengths to improve your profits, but also analyze your weaknesses and make a plan for ways to overcome them. You want to write down your analysis because that improves the chance that you will succeed in putting your plan to work. So for example, one of my weaknesses might be I sell too soon. This is one of my common weaknesses, is I tend to sell before stocks have really had their opportunity to make all of their move. So I had to come up with a plan, a set of steps to assess whether it is in fact time to do it. And what I've done is written down my rules for exit, and I go through a checklist before I sell or cover a short, exit a position, is I go through that checklist to make sure that everything is satisfied, and hopefully that will help me to stick with my winning positions as long as they are doing well, but as long as they don't have an exit signal. So that's the kind of thing that you want to do, is write down the things you do well, the things you don't do well, and then ways to build on those successes and overcome those failures. All right, let's get into this week's market analysis. And it's continued to be a very volatile market. If you recall, last week I talked about the market being heavily oversold and due for a bounce. Now, the reason I said that is because this downward trend line price had fallen far below it. And so I indicated it was likely that we were going to get a bounce back short term. That's exactly what we got. And we actually ended the week just up through that trend line. And then in the last sort of hour of the day on Friday, we pulled back to close more or less at the trend line. So it's an interesting pattern because the market rallied into that trend line, got stuck. The question is, will we break it next week with a move up through perhaps that 255 level, or are we going to fall back into the downward trend and then maybe try to make a rising bottom? So for now, this is a bearish chart. However, it's a chart that could easily turn into a bullish chart if we start to build some rising bottoms and break that downward trend line in the short term. Looking at the longer term chart, we have something a little bit more optimistic. Now, just again, we had that long-term upward trend line was broken, and that led us into this pretty significant selling pressure that we've seen. But this past week, we hit a new low and we closed above the open. That's why the candle is green this week. And that is a bullish sign. Now, again, if we want to draw our trend line, it looks something like that. And you can see that we're quite far below the trend line. That means the market is oversold and due for a little bit of a comeback. And so I think what we probably will see this week is a break of that downward trend line on the short-term time frame, and then perhaps a few up weeks as we take out some of that oversold nature in the market. And that could ultimately turn into a break of this downward trend line, but that is some distance away, so we shouldn't get too optimistic about that just yet. But it does look more likely that this week will be an up week than a down week. Certainly not a lock, given that there is lots of volatility. Either way, that volatility is great for short-term traders, a little bit more challenging for longer-term traders because you get whipsawed out of positions so easily. Here is the Russell 2000 chart. This is the IWM ETF, and draw the trend line. You can see that we're far below it. Had a few green days the last 3 days of the month there, and that should help us get back to that downward sloping trend line, get out of that very oversold nature. But there's going to be volatility. It might go up for a few days and then sharply down again as investors second guess that show of strength that ended last week. Now along to the Canadian market, and here is the TSX 60 on the very short-term time frame, and very similar to the S&P. We were oversold, we bounced back, and we're essentially hovering right around the downward trend line. We're building rising bottoms, and so if we now break up through this, we should start to move through these resistance levels in the short term and make a little bit of a comeback from these really oversold conditions. Again, on the longer term weekly chart, we have that close above the open for the week, and that should bring us back to the downward trend line. TSX Venture, finally a little bit of show of strength. This market has been a stinker for a long time, but it broke that downward trend line, which means it'll probably try to get back into here. I think we'll see some of these oversold cannabis stocks make a little bit of a bounce back. I don't know that it's going to be an end to the downward trend, but rather some bottom fishing opportunities for traders to take advantage of a bounce in these microcap Canadian stocks. On to currencies, the US dollar has been quite strong for some time, but last week it actually had a pretty rough week, and it has broken that upward trend line. Now, it did not do so from a falling top, it did so from a high, so I think we'll probably get a little bit of a bounce back, but ultimately that may be the US dollar going into a sideways trading range between these two bands of support and resistance near term. So look for that real show of strength in the US dollar to maybe take a break for the next little while. Now, you would think that the Canadian dollar would therefore be strong, but it is not. It had a down week, even though the US dollar also had a downward week. And so we are still in this pessimistic downward sloping channel, but we are at some support near the bottom of the channel, so it should try to make a little bounce back. We're also nearing this support zone from the May lows of 2017. So again, US or Canadian dollar not looking very strong, but also looking likely to make a little bit of a comeback near term. Interest rates always important for the market, and we've seen interest rates go down as the bond market has risen through the correction that we saw over the past few weeks. However, the bond market is now at that resistance level where that strength should end. I expect that we're going to go sideways in the bond market, maybe even come off a little bit, especially if the stock market finds a footing. That will mean that flight to safety out of stocks and into bonds may end, and you see some profit taking in the bond market. Commodities, here is the chart of gold, and of course gold typically is inversely correlated to the US dollar, but the last few months it has been more a hedge against market weakness, and so even though the US dollar was strong, gold was also strong. Well, this past week the US dollar was weak. That gave a little bit more wind to the sails of gold. We actually had a pretty good week to the upside for gold. I think gold may be headed up toward this resistance level before it gets stuck. I'm impressed with how the buyers keep coming back. I always have a hard time being a gold bug because I don't believe it's the same hedge that it once was. There are so many synthetic hedges out there in the market nowadays that I don't think gold has the same utility as a hedge. Nonetheless, we can't argue with bottoms rising from left to right. The buyers are in control of gold, and it does appear likely to continue higher near term. Now, the opposite can be said for oil. It has been a pretty dismal market as we've had that sharp sell-off. This past week, it closed more or less where it opened. This is a type of candle called a doji, where you have a close more or less where it opens, and that is often a sign of a reversal, very aggressive early signal of a reversal. I wouldn't get too excited about it, but it is somewhat encouraging. Maybe we'll see oil come up a little bit, especially if the US dollar weakens a little bit more, because the oil is priced in US dollars. If the US dollar gets weaker, then it makes oil cheaper. So often you will see a bounce back in oil prices if the US dollar falls off. So my ratings then, still bearish on US and Canadian stocks, but we're very close to getting an upgrade in the short-term time frame from bearish to neutral if we can break that downward trend line. Long-term and short-term bullish on gold, and long and short-term bearish on oil. Stock markets bounce back from being very oversold this past week, but they haven't broken those downward trend lines yet. We want to watch this week to see if these downward trends get broken, indicating the buyers are fighting back for control. Gold continues to trend up, and oil is still struggling to find stability. We shouldn't forget, though, that volatility remains high, and that makes it difficult to be a long-term trader. You have to be willing to move in and out quickly, taking advantage of that volatility. On to the trade of the week. And this is not a trade that I did. I am on vacation right now, so I haven't been trading the past week and a half or so. However, what I wanted to do here is just give you a little bit of a lesson on how the market gave you signs that it was bottoming. So this is a chart of the NASDAQ 100, QQQ, the ETF that represents the NASDAQ 100. There was the downward trend line, and we saw on whatever the first day of the trading week was, I'm so lost, I think it was Wednesday, after the Christmas holiday, We saw the market gap up on the open, but at that point it hadn't broken the downward trend line. So it was an initial sign of strength, but not one to get too excited about. It then retraced, but made a rising bottom and then broke the downward trend line later in the morning. And that was a good signal that the market was going to make a bounce back from being oversold. So we had a rising bottom, which is a sign of optimism. We had a break of the downward trend line, and then we continued much higher from there. Of course, that was the 1,000 point gain day for the Dow. Real simple process to look for bottoms. Look for those rising bottoms. Look for the break of the downward trend line. It happens over and over again. Very reliable pattern for picking bottoms in stocks and markets and anything that trades with liquidity. Well, that has been the Stock Scores Market Minutes. I want to wish everyone a happy new year. I continue to be on vacation until January 10th, and then I'll get back to doing a little bit more fancy video. Right now I'm just doing it from my cruise ship on my laptop, but we'll get back to normal in a week or two. Have a great week in the market and trade well. Best wishes for 2019.